I'm Virginia McGathey here on the floor at the CME Group reporting on the grain market today. Soybeans was really firming up. The market was up almost 8.5 cents, kind of rebounding after yesterday's sell-off. But the market really topped out, and it looks like possibly we're going to try to maybe before the end of the day really take out that high. But the dry weather in Argentina is still persisting, and it seems like that some of the selling, kind of appeared with a little bit of profit taking. Some people wanting to take, take a little bit off the table right now, and that usually happens when we do make a new high. So we have to watch that. Some of the money managers as well also taking some money off the table. But the futures still remain relatively strong overall, and it's, that there's a couple of things to watch right now. Certainly it's the weather in Argentina, and that they've been looking at a 4-month drought. This is still going on, and it seems that some of the exports, the experts are actually reducing what they feel the yield is going to be. And it was starting at 57 million tons, and now we're looking at 47 million. I mean, that's a pretty big gap here. And if that happens, you're going to see a big run on the U.S. market, and I think that's adding the strength to the market. And now we're well above that $10 mark, and it still looks like that it's going to stay here and even more. So the market still looks strong. Corn was steady, even though corn seems to have a little bit more problem with what's happening in Argentina. Because corn matures a little bit earlier, you would think that the corn would be affected a little bit more, but it's going to be more difficult to get to that $4 mark and get above that. It's going to be a big resistance level, and that's what it's showing us right now, because corn has been in a consolidation phase, and that is continuing. And after yesterday's, near high, profit taking again came in. They jumped right in, and now it's certainly these corn prices are, solidly holding in place. So that looks good for the future, and that certainly looks like we're going to, that the market could really jump up from here. The market still remains relatively bullish, and it seems like some of the commercial traders are offering some support here and still, buying some of those futures. Now with the wheat was a little bit mixed, and there has been poor weather still remains in those the U.S. southern plains, and you would have thought that maybe that would offer some support. Today, not exactly. We really had trade on both sides of the of unchanged, but it seems like the technical numbers are beginning to point to the south, and that's why we did get some selling. I think some of the traders are a little bit nervous that we've gotten way up into this area, and they don't know, what to do. Can we get more follow-through buying? When it doesn't come in, everyone starts to sell off a little bit. But it seems that there's no one completely getting short at this time, because we're getting closer and closer to the time where we're going to find out if there's real crop damage. And the more that the dryness stays in the southern plains of the U.S., the more that the possibility is going to remain exactly that. So with these traders a little bit nervous to get short, we're going to see the market still be a little bit stronger. So today the market was off just a little bit, but I think that it's definitely makes it vulnerable to a little bit more of a correction. But in that, volatility is here to stay. We're in a full-blown weather market, so I expect a lot of volatility across the board, across all of wheat, corn, and soybeans. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.